This graph highlights the performance of each ale in terms of total sales. Alley Cat leads with 143,840 units sold, representing nearly half of all total sales. Edgar and Taj follow with 89,183 and 85,493 units, respectively. It is clear that Alley Cat is our most popular product, and its dominance could guide future production and marketing focus. This chart highlights the sales. Alley Cat significantly outperformed the other ales, while Edgar and Taj showed competitive sales figures. This visualization shows monthly trends in total sales. We see a clear peak from April to June, with May reaching the highest sales at 43,645 units. Conversely, October and November are the lowest performing months. The seasonal trend suggests a concentration to demand in quarter two, likely driven by specific market factors or customer behavior during this period. The chart highlights these figures. This breakdown reveals how each product contributed to monthly sales. Edgar maintains relatively steady performance with slightly higher peaks during March and December. Taj shows similar trends but dips slightly in October and November. The consistent contribution of these ales suggests opportunities to further stabilize their sales during the off-peak months. Both ales show aligned trends but have potential for targeted interventions to boost sales during lower performing months. This graph reinforces the seasonality in sales. The highest quantities are recorded in May, followed closely by April and June. Notably, the drop in October and November suggests an opportunity to explore customer behavior and address potential gaps during this period. Understanding what drives the peaks in quarter two and the troughs in quarter four can inform our inventory management and promotional strategies. This chart highlights that information. Quarter two is consistently the best sales period, while quarter four requires additional focus to mitigate the sales decline. At the beginning of the year, we set an ambitious target of achieving an EBT of $247,000, and this goal was underpinned by a clear and focused strategy. We invested in a fifth fermenter to increase production capacity, which was critical in allowing us to scale up for peak demand periods, particularly for Alley Cat during the summer months. To further enhance profitability, we implemented a pricing strategy that involved a price increase in July, which was expected to boost revenues across all products. Additionally, we adjusted prices throughout the year based on performance and market trends, lowering the price of Edgar Ale later in the year to drive more sales and increasing Taj Mahal production after August when Alley Cat's demand began to decline. With consistent monthly expenses of around $53,346, we plan to optimize profitability by carefully balancing production and pricing decisions across our product lines. This strategic approach laid the foundation for what we anticipated to be a highly successful year. Now let's look at what actually happened, which turned out even better than expected. By the end of the year, we surpassed our EBT target, finishing with $291,386, an impressive $44,000 above our goal. Early on, we raised the price of Taj Mahal, which created a steady and reliable revenue stream throughout the year. During the summer months, we increased the price of Alley Cat to capitalize on high seasonal demand, and this resulted in a significant sales peak in May. However, inventory constraints led to a dip in sales for Alley Cat in July. Recognizing this, we adjusted our strategy in September by reducing Alley Cat's price to clear out remaining stock, while simultaneously lowering Edgar Ale's price to stimulate late-year sales. These changes allowed us to adapt to shifting market conditions effectively. Taj Mahal, meanwhile, remained consistent, providing a stable source of revenue across all months. Overall, our ability to remain agile and responsive while balancing production and pricing across our product portfolio was the key to exceeding expectations and achieving such a strong outcome.
So why was there a difference between what happened and what we had planned? I think that the simulation overall was similar to what we had planned out in our team planning meeting and our individual spreadsheets, and our results reflected that because we did a really good job selling by season and not selling out of our inventory, which led to our EBT being where it was supposed to be. I think a large reason our simulation was different was because our production wasn't as intricately planned out as our spreadsheets were, which is to be expected, but it's definitely something that we can work on and kind of just, instead of relying on our individual spreadsheets, I think maybe we can rely more on the live data that we have by year and what we're seeing inventory-wise for that current season. We knew around which month to increase production of certain products, but we didn't follow it exactly. And it was the same thing with our beer prices. So we knew kind of what month to raise our prices, but I think looking back at our graphs and our data, we could have raised them a bit quicker for Alley Cat in the earlier months and then maybe lowered them towards the end of summer. So just making those adjustments a lot quicker. So what can be learned? So we would probably be more diligent in changing our prices. We had a lot of Alley Cat inventory left over after the summer months when sales dropped off, and we could have lowered our prices to sell more Alley Cat. And based on our charts, we sell the most inventory in the beginning of summer, spring overall for all beers. So we should start adjusting our prices ahead of those times and then lower them towards the end of summer to get them ready for fall and to increase our sales going into fall instead of doing them a bit later when fall hits around like October, September. I think maybe starting to lower prices in August, late July would help us increase our sales for the later seasons. Thank you.